Hey friends, welcome to Expert View, where I'm joined by Julian Wheeler from Charlotte Capital. Julian, welcome back from the slopes.
Thank you very much, Ange. Happy to be back in one piece, obviously. Better weather up a mountain than there is in London, that's for certain. But
well,
yeah.
Clearly you've come back you've missed the wild ride on silver and gold, and you've come back and brought more stable weather with you.
Yes, I warned colleagues that when I go away, very often something implodes, and it was just the same. This time it was metals. I think there's actually something to be said for that, and I think that it's been put out by some people that the reason that these metals collapsed, and Bitcoin with it as well, is that all these things are becoming correlated. Margin accounts have got the lowest amount of cash in them ever. That's a chart I've just seen shown to me yesterday. And so if Microsoft earnings were not good, which they weren't on Thursday, people have to sell that. If they've got losses there, then they sell something else. And as soon as silver starts going down, you know the drill. People are in this stuff too much.
I know, it was becoming like a meme stock. I think we talked about this quite a few times on the show as well.
Yeah, I mean, so if people, I personally, I'd stick well clear of that. And what I'm going to talk to you about today are a couple of stocks that I think which people have under-owned, not been looking at, and so it's very much a case of get out of the momentum stuff and into other things, I think.
Now, you know that I love an underdog. So let's start off with the short-term likes first. Let's take a look at some short-term investment strategies. Julian likes 3 to 6 months. Let's start off with, tech, because it's been such a big week for tech so far.
Yeah, and obviously tech is the largest part of the market, of the US market, which is what I do. And it's always a case there of trying to work out what is heavily owned by institutions and what isn't. And if you can find something that's looking like it's starting to work and it's not on everyone's radar and on their shopping list already, then you've got a lot better chance, I think, of getting some performance. So it's why, however well NVIDIA does this year, I don't think you're going to make any money in NVIDIA. It's like carrying too many suitcases up the stairs. Eventually you're going to drop a few and it's going to just be too hard to do. So while NVIDIA won't be going anywhere, I'd actually like Intel.
Now, is this because it's been whacked down a bit too much?
Well, no, I mean, Intel is actually double what it was last summer. When I came on the program last August, I talked about Intel with Rich, and it's doubled since then. The US has invested in it. Intel sort of is Trump's second golden child. Boeing was his first, and he's backing them. And then the US government now owns 10% of Intel. So what does that mean? It means that basically, if there's any decision between A and B, you're going with A, and A is Intel. And that means that manufacturing, which is a national security imperative, TSMC is the only player in the world. The fact that 75% of the world's semiconductors come out of a 100-mile long island off the coast of China is not actually very smart. That's not smart, leaving aside the politics. What happens if there's an earthquake in Taiwan, which is not impossible? What happens if anything happens? You just don't put all your eggs, or in this case chips, in one basket. And so this national security, manufacturing at home, that whole big theme that Trump so pushes, led him to say, right, we're going to buy 10% of Intel. Intel's been in a mess. It missed the whole AI trade. It missed a whole load of manufacturing process jumps. There's a whole history to why it was unsuccessful. It goes all the way back to when they said no to making Apple's iPhone chips, which was a big mistake. Anyway, but we're now back in business because what's happening with AI?
I mean, it did have that 24% fall from in early January, but it's
Oh,
come
yeah,
back.
yeah. So,
It's come
okay,
back now.
right. So bringing us up to date.
Half of that.
Yeah, up to date. So the stock had done incredibly well, and everybody thought they're going to produce great earnings. And like often, you see stocks get ahead of themselves; they get too frothy. And then when, even however good the news is, and to be fair, Intel wasn't great, it's just you're too quick. But the direction of travel is the right one. The impetus behind them, what I think you're going to see now. So the stock fell from 54 down to 42. It was a wonderful buying opportunity. It's back to 48 now. And it's still 10% lower than it was just 2 weeks ago. But I see Intel outperforming Nvidia this year by a handsome country mile. What you will find is that Nvidia themselves and Apple and others will all end up making their chips with Intel. After all, Nvidia has invested in Intel. Apple has invested. They've all made commitments that they are going to spend money in the States. Now, how is Apple, how are Nvidia, how are they going to spend money in the USA? They're going to get their chips manufactured by Intel. It seems to me incredibly clear.
Now, Julian, I know your time is very short and you've got back-to-back conferences. Let's get an update on MongoDB.
Okay, Mongo. Well, your regular viewers will know I've talked about and liked.
I know. If I got £1 every single time I got asked for an update on MongoDB, I would be rich now.
Oh, okay.
I mean,
Well, let's try.
The day you talked about it was kind of like the day it started the avalanche for Ask Ange when Julian is going to come back to talk about MongoDB.
Okay, well, that obviously means hopefully people have got on board Mongo. Right, so since we last talked about it, so I met the new CEO. He's called CJ Desai. He came over from Cloudflare. He was previously at ServiceNow. He was previously at Oracle. He is a software, veteran. He's not that old, but in software terms, he's been around for a long time. He's now the top man at Mongo. Mongo, for those who don't know it, Mongo is the database of choice for software developers who are developing products using AI tools. How do I know this? Well, there was an Anthropic, which is, Anthropic is similar to OpenAI. You know, this is the other form of language model that could be used. They make Claude, which is their brand name. They have developed and continuing the whole Anthropic model is keeping pace with OpenAI. You've also got Google with Gemini. It doesn't matter in the end which language model, which format AI takes. What it's going to do, the AI revolution that's going on is going to create more data and more software than we've had up till now. So if you think that up to the time of the internet, the amount of data creation in history of human civilization was then overtaken in the next 5 years by the internet. You're going to see the same thing again. How is this possible? Because if we're going online and doing things, we're all going to have these little chatbots. We keep hearing about this, but these things are actually coming to fruition. And they are going to
create... You can't avoid them if you wanted to.
Sorry?
You can't avoid them if you wanted to.
No, you won't avoid them. There will be. You will have your own. If the way this is going, and I'll come on to that in a second, is that the idea is you're going to have your own. The latest thing is called, it keeps changing the name. Claudebot was its thing the other day. This was a new personal chatbot that actually looks like it's open source, it's going to be free, it's going to live on your device. We are reaching very rapidly the stage where the consumer will have AI. When you have consumer AI, all of this data that's then created as you yourself go send off your bot to do the shopping, do research, it's going to create data that you're going to want to use. And if you have to have data, you have to have it sorted. Otherwise, it's just garbage. And MongoDB has the ultimately best platform. And how do I know this? Because at the Anthropic Developer Conference, they said the most popular database running our stuff is MongoDB. So yes, it's had a pullback at the moment. It's a volatile stock. It's not cheap, but it's not super duper expensive. Palantir, which reported last night, great numbers. Palantir shows you that the development of AI-related tools, data management is continuing. And Mongo will report, not for a while, so we've got plenty of time. Doesn't report till March, I think, next time. It's on a delayed quarter. But Mongo's pulled back to about 375 from a high of 440. I still have it going well above 500 this year.
Nice, nice, nice. And let's take a look at some of the longer term plays. Just quantify for us, Julian, before you talk about your picks, what is longer term in the Wheeler universe?
Wheeler universe. Well, long term has now become anything that's a year. And that's because everything with the world's information that's out there now, 2 o'clock, now with the information that is available through your platform and others, and the ability for every individual investor to find out so much so quickly, it means that things remain undiscovered for far less time, so that the returns you make, I think, have all speeded up, and that's what we see happening. So long term is a year, but it could obviously happen. It could go on longer. Things keep going. You know, Mongo, I've been in for a year now, and it's still going. But I expect this to work very well. I'm going to a name that I haven't bought for ages. Apple.
Okay, go on then.
Apple.
Ah!
Apple.
I thought you didn't like Apple.
I didn't like Apple, but I've suddenly worked out in the last few weeks that things have changed. And it's this thing that I've just already talked about. This thing called, well, it was called ClaudeBot. I think they've changed the name again. But basically, we've reached the point where AI is reaching the consumer. If AI is reaching the consumer, you finally have a reason to get a new device. And the reason you're going to need a new device is that for security purposes, your own or the corporation you work with, the company you work for, or for your own safety and security of bank details, private information, all that GDPR, everything to do with privacy. You cannot have an AI agent running your life and having full access to the rest of your life. You're going to need to compartmentalize it. That's how I see this happening. And if you compartmentalize...
So Apple is your safety play for this?
Well, what it means is that you're going to have another device. You're going to have, whether it's a phone, whether it's a Mac, whether it's a laptop, whether it's a new product, we'll come to those in a second, you're going to have one for you and one for your friendly agent, whatever you want to call it. Maybe you're going to give it a name. Maybe you're going to, whatever it's going to be, it'll have its own email, it'll have its own account, so that you will have this separate device. And I think, and I've seen this, the MacBook Minis are already sold out. I mean, they are selling out like crazy. Apple's earnings were very good, but the fact is the market slightly didn't believe them because they've had to lowball a bit on profitability because of the problems we talked about when I was last with you from SanDisk. Remember SanDisk?
Yes, I do remember SanDisk.
Yeah, well, it's up 50% since we were on last. I would be taking my profit there, by the way. The jump up in earnings that SanDisk has now reported and guided to is now understood. So from 400, we're at 600. You know, you're being greedy now if you stick with it. You've done. What it means is that the cost of memory and all these the processes they do is going to have to be borne by Apple. But only Apple will be able to leverage that across their base. And I think they are going to show the offset for that will be using their own chips, which is bad news for Qualcomm. And you're going to see that tomorrow. So Qualcomm's an avoid for me. Don't know if it's a short, it's tricky, but it's definitely not a buy. So Apple will be able to offset this. You will have a new device from Apple, and they may have some new products we'll hear about later in the year, maybe March, April. They're talking about having a sort of like a pin that you can have almost just attached to you, which will have a microphone, it'll have a reader, it'll listen to your voice. Won't have a screen, obviously, but then that will link to your other device. So we have a new...
Well, this is all very interesting stuff, Julian, because it ties in with some research I've been doing about this wearable technology. And Apple have recently bought, and this ties in what you're talking about with that pin, a silent speech company that is from Israel that looks at your facial muscles as well as listening to you speak to kind of get the nuances. So it's called a silent speech monitor.
Yes, I saw
That is
that.
extremely fascinating.
This is the direction we're going. The thing is, when you think about it, it's a phenomenon that I don't think we've ever had, where one company has managed to control the world's consumer product for 20 years. The first iPhone was 20 years ago, and they haven't been toppled, which is a remarkable.
I think I've got one somewhere in my loft.
Ah, there you go. The original one is probably worth a lot now.
Yeah.
Especially if you kept it like the K-pop, my Funko Pop kept it all hidden away. Don't forget Funko.
Yes, it's hidden away.
Funko's still with us, by the way. Anyway, so Apple, what it has going for it now, it has the ability that we could have a product refresh. You will need to buy MacBooks. I think they're going to bring out a new, cheaper MacBook that will, and the reason it'll be cheaper is because it'll have limited functionality. It will be your AI agent. So they'll have less components. They can hopefully, that's how they'll get over these huge memory costs. They'll use their own mobile phone chip, which will reduce the price of that. And they are, if you like, because they've been in the AI sin bin, everyone said, oh, they're not an AI play. You don't need to own Apple.
Oh, yeah. They keep saying they were very late to the game.
Late to the game. But that's my point about when I said that's why it's under-owned. You're talking about the world's third biggest company. And it's lost that place because everyone's pushed their money into Nvidia and Microsoft. And also Google. I'm happy with Google. Google's in my stocks of the years. But I didn't have Apple because when I did this at Christmas, we hadn't hit consumer AI. Now we have. Apple is the play.
What's interesting too is that every time I go to Asia, I'm gobsmacked by how fast it's moving over there. And I really like the sensor space because have you tried Palm Pay?
No.
Where you can actually pay with your palm. It's very handy when you're skiing.
Okay.
Yeah. And so there's some places in Asia, you don't see it in Europe just yet, but like when someone else tells you, oh, you've got to pay for this thing, and you haven't got it all set up, then you have to go and look for your card, and you have to look for the number, and then you have to get the, security code. Well, there's some places in Asia where you can already pay with just showing your palm if that
it's funny
particular service provider has that service.
It's funny you said that because actually, where I've just been skiing, there was a lot of, in the restaurants, they all were delighted if you paid cash.
Really?
And yes, and I was paying cash because there were times when I was rushing and it was quite crowded. And so I just say, look, here's the bill, cash on the table, bye, I'm off. And because it's quicker. And the chap called back to me, oh, cash is king. He said, yeah, we like that because there's less of a cost. It actually brings me, though, on to my other long-term idea, if you want. Which has
yes,
been
of course.
out of favour.
Hit us with it.
Out of favour during what I think is a mistake. The market's made a mistake. They think that stable coins are going to take over the world, and they think that credit cards are going to be capped on credit interest, and they think that we're not going to pay. We're going to use all these new techniques for payments, as you said, and suddenly we won't need Visa anymore. Wrong, and wrong again.
Now, I would love to hear this because to a technical analyst, the Visa chart to me is ideal if you're an options trader. Not great if you wanted to take a short or long position because all I'm seeing is this sideways, almost like a ship that has lost wind in its sails and it's just just bobbing around listlessly.
That's exactly what I like. I'm so pleased you say that because that's exactly the point. I don't want to buy something when it's gone. Visa has gone nowhere. It's gone nowhere for a year. Because over the last year, there's been all this talk about stable coins, that we're all going to suddenly use stable coins. We're going to have new networks. We're going to control all the payments on new ways of doing it. And the answer is we come back to what I said. With the proliferation of data, security and privacy, and then there's been regulatory pressure on them to lower interchange costs, and they've actually done a deal whereby they have lowered some of these costs. But the reality is that if you want to go onto a different network, the fraud, the security breaches that are liable, they will tell merchants, fine, go and work on another network. But by the way, you're not covered for any of that fraud. You have to remember that if anything goes wrong, Visa cover that. You know, it's like wrapped up in insurance. You know that if something goes wrong with your card, you don't pay. It gets paid. And the reality is, for saving 5 basis points to go to another network, when you're going to be hit by 25 cents of fraud and insurance claims, people will work out, actually, you know what, I'll probably stick with Visa. So the stock at 320, they put out numbers the other day. The other thing is that, which were just fine, in line. The market was fairly ho-hum, and then suddenly it's taken a couple of days. And yesterday, we started moving up. I think the stock's at, it's been in the 320s, 320. It dropped on this latest regulatory from 390 at the beginning of the year, so we've got a dip. We can easily go back to the top of the range, which is 380, 390. And this is the other thing, if other things start to wobble, if you lose tech, if you lose the AI trade, we have further disruptions, suddenly Visa becomes a very nice, safe house to be in. So I see that. And all the payment systems. By the way, there was another negative, which was all the buy now, pay laters. Mm-hmm. Initially,
the BNPLs.
Yeah, BNPLs was seen as a headwind for Visa because it was you were taking people off network onto their own private. But again, what's actually happening is that they found this incredibly difficult, so that merchants are actually suddenly the proliferation. It's actually easier to stick with Visa, and that all these buy now pay laters from being a headwind before become a tailwind as you have more transactions, if people split them out over time. So that, again, from being a headwind becomes a tailwind. So
interesting stuff. Thank you very much, Julian. I would not have guessed you would have chosen Visa. Mm-hmm. It was founded in the 1950s by Bank of America as their Bank of America credit card program. I always think that Visa is a lot older than that, but it's actually not that old after all. No,
because it was owned entirely by the banks, as you say. And then they made it, they decided, rather than, initially Bank of America thought, well, this will be our competitive advantage. But then suddenly it was realized to have each bank having its own network would be prohibitively expensive for them and the consumer. So it was agreed, well, look, let's use this one, Visa, and then we'll all own it. And that's what happened. All the banks ended up with a piece of it. So that's why it became ubiquitous, and that's why the world uses it.
Right. Thanks very much. We'll leave it there, Julian, with his short-term investment plays. Those were Intel, and also we talked about MongoDB. And longer term, this is a 1-year duration, Apple and Visa. Thanks so much, Julian. Have a great week ahead. We'll catch up with you soon.
Thanks, Ange.